After hitting home runs on the field, what happens off the field? Mark here. You know A Rod is an all-time Yankee great, but his comeback story? Bigger than baseball. He signed MLB's richest contract back in 2007, a massive Yankees deal that made headlines. But the real shocker is what he did next with that money. He turned it into businesses, buildings, and even a path to owning teams. That's the journey we're breaking down today. We dug into his deals, houses, startups, ownership moves, you name it. We combed through sports archives and financial filings to piece this together so you don't have to. If you love sports and business secrets, hit like and subscribe. And hey, you're watching Kickin Riches, where we blend money and game like a perfect pick and roll. Quick poll: did you expect a baseball player to build an empire? Drop a yes or no in the comments. I'll show you how the real home run for Alex Rodriguez came from deals off the diamond. But how did the baseball legend turn into a business mogul? Let's start at the moment the money met the mindset, the pivot from stadium lights to startup life. How did Alex Rodriguez begin building his business empire while he was still playing? Here's the twist: he didn't wait to retire. In the early 2000s, he set up A Rod Corp as his investing vehicle, and by 2003, he was already placing bets on real estate and young companies. Then came 2007. He hit MLB's jackpot with that $275 million Yankees contract. That wasn't just a flex, it was fuel. He said he's an entrepreneur at heart, and this is where you see it. He didn't chase only fancy toys, he started seeding real deals. Think of it like a smart athlete lifting in the off-season, small, steady reps that lead to power later. From the start, Alex Corp was built to be focused and in his control, a hub to channel those checks into assets. We reviewed interviews with Rodriguez and company filings to confirm those dates and that early strategy. Quick question: if you had a sudden $200 million, would you invest it or spend it? Comment below. He had capital, a plan, and patience. So what did he buy first? And how did that one move snowball into a portfolio that spans states? Let's open the door to his favorite play: property. Why does A Rod love property? Simple: steady income and control. Real estate became his backbone. Reports say he started with one apartment and grew into hundreds of units across the Southeast. His company is described as a fully integrated real estate and development firm based in Miami, and that focus shows. He didn't just flip a condo here and there, he built, partnered, and scaled. Press reports even list A Rod Corp as an owner of Grand Station, a 30-story apartment tower in Miami. That's not a small play, that's a skyline play. And personally, in 2020, he paid about $32 million for a beachfront home in South Florida. That's a wow house, sure, but it also screams confidence in the market he knows best. We tracked real estate records and company documents to map out these investments, and we kept seeing the same pattern: housing, recurring cash, longer holds. As a basketball fan, it feels like running the same high-percentage set over and over until the defense breaks. Which property would you prefer? A $32 million mansion or your own rental apartment building? Tell me why. He had a base that printed cash. But did he stop at bricks and rent checks? Not even close. Time to see how he branched out. Did Rodriguez stick to houses or did he diversify? He spread out big time. Sources say A Rod Corp has invested in over 30 companies and partnerships. That includes fintech ideas like fan engagement stock markets, wellness brands, venture funds, and sports tech plays. He teamed up with builders and tech operators, often partnering with folks like Mark Lohr to chase new platforms in sports and media. The pattern is clear. Use real estate cash flow as the engine, then try calculated shots in growth sectors. We cross-checked company filings and press reports to connect these dots. And here's a signal of how he works once he's in a deal. CBS Sports reported that he and Lohr were involved in all the major decisions around the Timberwolves project. That hands-on style tracks across his portfolio. Have you ever invested in a startup? Vote with a thumbs up or down on that strategy in the comments. A Rod didn't spray and pray. He picked lanes where his name, network, and knowledge gave him an edge. But what happens when an investor with that playbook tries to buy a whole team? Let's talk ownership. Could A Rod actually own an NBA team with a decade-long plan? In 2021, he and Mark Lore agreed to buy the Minnesota Timberwolves and the WNBA's Lynx for about $1.5 billion. The structure was unique, a phased takeover. Glenn Taylor stayed in charge for a stretch, while A Rod and Lore paid in installments. On March 28, 2023, they completed a $290 million payment, the second of three, putting them on track to be majority owners by 2024. Even before full control, Rodriguez got involved. He backed bold calls like hiring Tim Connolly to run basketball operations and greenlighting the blockbuster Rudy Gobert trade. His quote sums up the mindset: "We do have a window for 4 or 5 years, and we're taking a swing at it." That's an athlete's urgency applied to ownership. We dug into league reports and press releases to verify these details, and the timeline is tight and deliberate. Would you invest in a sports team if you could? Drop a yes or no. This wasn't a vanity buy, it was an operating play. So if he's owning teams, what's next? The digital arena? Let's go there. Football and baseball are big, but what about virtual fields? Where is A Rod playing off the court? Reports say he's been eyeing esports teams, media networks, and even philanthropic ventures through A Rod Corp. That lines up with his own broadcast chops as an on-air analyst, which grew his brand and deal flow. He has teamed up with tech entrepreneurs, again, look at Mark Lore, to back players' first ideas and new fan platforms. Think streaming projects, content studios, and apps that let fans feel closer to the game. We tracked tech news and interviews to follow these moves, and the through line is clear. Meet fans where they are, on their phones and feeds. As a cars guy, I think of this like upgrading from a classic V8 to an electric motor. Same love of speed, new kind of power. If you were Alex, which would you invest in next? A tech startup or a media outlet? Vote in our poll. The bet here isn't just screens, it's attention. But how big is the empire behind all these plays? Time to tally the scoreboard. So with all these deals, what's the bottom line? A recent analysis pegs A Rod Corp at roughly $650 million as of late 2023 based on its known holdings. That estimate is driven by real estate assets and his stakes in businesses, plus the path toward team ownership. Remember, he and Mark Lore made that $290 million installment on the Timberwolves deal alone. Stack that with over 30 company investments, and the scale starts to show. We consulted financial databases and industry analysts to validate those figures where possible. Does that make him a billionaire? Not yet confirmed, but you can see why headlines talk about building a billion-dollar empire. When you have cash flow properties, growth bets, and franchise equity, the compounding gets interesting. Can you guess whether the real number is higher or lower than $650 million once you factor in private valuations? Drop your guess below. Either way, that's serious weight. So what turned a slugger into a steady deal maker? Let's pull the core lessons you can actually use. What principles turned A Rod from a retired athlete into a savvy investor? He treated business like a second career, not a hobby. First, he diversified early. Those peak baseball earnings seeded multiple ventures instead of one big splash. Second, he focused on income, not flash, real estate and operating businesses that send checks each month. Third, he played to his strengths. He leveraged his sports network for team stakes and sports-adjacent companies where his insight really matters. Fourth, patience. The Timberwolves plan took phased payments and years of work. Finally, teamwork. A Rod Corp's values, meritocracy, integrity, teamwork are front and center, and you see that in his partnerships with seasoned operators. We analyzed his interviews and filings to pull these lessons out, and the pattern holds across the timeline. Thinking like A Rod, if you were an athlete, what type of investment would you try first? Share below. These aren't get-rich-quick tricks, they're fundamentals. Invest early, build cash flow, partner well, stay patient. Ready to put that into your own game plan? One last thought to wrap this up. Alex Rodriguez's story shows that a stellar sports career can be a launchpad for a sprawling business empire. From that record 2007 contract to Miami Towers, from dozens of startups to a phased NBA buy-in, he turned fame into assets and assets into influence. I'm Mark, and I hope this was both surprising and useful. If you enjoyed this deep researched breakdown, make sure to subscribe, like, and share. It helps a ton. This is Mark with Kickin Riches, and we'll keep digging through public records and fresh reporting to bring you the real stories behind the headlines. Thanks for watching. What deal of A-Rod's do you find most impressive? The Miami Tower play, the $32 million mansion, or the Timberwolves run? And which part of his business would you want us to explore next? Hit subscribe for the next drop, and I'll see you in the comments. What big investment will A-Rod make next? Only time will tell.